a strong green day for Bitcoin, up 2.5%, reclaiming the 20,000 mark here as the UN joins a voice asking the Fed to U-turn. Yes, there's a bunch of speculation now that the Fed could be close to U-turning. Remember, this U-turn is the critical juncture when the Fed decides to stop increasing interest rates. We're going to analyze what are the key levels in the charts, what's going on with this U-turn, and is there a possibility that a U-turn is on the cards, and to what extent is that priced in? I'm also going to be sharing some trading opportunities with you, so make sure you smash the like button. Don't forget to subscribe. As always, check out the links in the description if you want to take any of these trades with me. BYBIT and BitGet, links in the description, offering some amazing bonuses in the two platforms I use to trade every single day. Now, this is where the noise started. The UN, and last week we had the World Bank as well, have joined in on calls asking central bankers, including Jerome Powell, including the Bank of England here in the UK, to calm down, to pivot, to halt their interest rate increases. As you guys know, we are in a deep monetary policy tightening circle that has seen crypto really fall to the downside here, as we've seen a huge retracement all the way on crypto, and we've been monitoring this on a day-to-day basis. And one thing we've known is this will get better. Crypto can start to move to the upside once we've got a pivot, once we see that the Fed change their mind and halt the increase of rates and eventually start deciding on cutting rates. Well, what the UN are now saying is they've come out and said that if we continue to raise heights, you could be damaging the economy. Let's take a look here. A recession worse than that experienced after the global financial crisis could result from monetary regulators tightening policy. Worries that an unduly rapid tightening of monetary policy in advanced economies in combination with inadequate multilateral support could turn a slowdown into a recession. In other words, they're not just worried about the developed economies. What they're saying is if US and the UK and Europe tighten all synchronously, right, all together at the same time, they're in sync, and they're all tightening really aggressively to take control of inflation in their own economies, this could have undue consequences on the rest of the less economically developed countries across the globe. It really could make it difficult for them to import as dollars continue to show strength and the Dixie continues to climb, which we're going to come on to very shortly, because the Dixie is the big crux of the argument here in terms of seeing when will Bitcoin get its run. And we're starting to see some interesting clues coming out now. Vicious economic circles in the developing world, with the damage more lasting than the global financial crisis or COVID shock. So this really could be horrible. And it goes on to outline that they're basically voicing that they not increase rates so strongly right now. So what are we seeing? Well, if we head on to the Fed rate monitor tool, and this is always the first thing I will do anytime I hear some news about pivoting, I want to see what does the market really have priced in, because it's all right to get excited and follow the charts, but what can we actually see? What I can see is that we've got the next FOMC meeting on November the 2nd, and 61% of the market still prices in 75 basis points. Now, in order for this to be a real pivot, you want to see 50 basis points. In other words, the market would have to price this one in as the most likely opportunity. That's not what we're seeing now. So the market is not pricing in the pivot, although we can see that the markets are starting to respond, and we're going to break that down and what that looks like. So we're seeing the yield start to come down now, 3.6. Remember, this was peaking here at 3.96. So we're seeing the 10-year treasury come down. That is good. If we monitor that through, let's take a look at the GBP, right? The GBP, which needs to show strength for dollar index to weaken, is showing some strength now. It's running past its 4-hourly EMA ribbon here. If we switch across to the daily, you can see it's running into its daily EMA ribbon. Now, why is this showing strength? This is showing strength because the UK Chancellor had to U-turn on one of his measures to do with the 45p tax rate. Okay, so that U-turn is allowing the GBP to pick up some strength, which is conversely showing some weakness in the dollar index. And this is good now. So on the daily chart now, we're seeing us go and test our EMA ribbon. Now, I need to provide an important warning to you all. And the important warning is, do not get carried away until we lose this daily EMA ribbon. We've seen it time and time again that the dollar index touches its EMA ribbon and it goes on another powerful move. Let's not disrespect the dollar index right now. Look at this move. Look at this move. It showed great strength here. So do not suddenly think just because it's touching its EMA ribbon that we're now free and Bitcoin can start running. No, pay some respect. Let this really show some signs of softening. Let's see if we can lose our EMA ribbon on here, because what I'm scared of is if we just do this and then go on a bigger run here on the dollar index. And if I zoom out here on the weekly chart on the dollar index, what is the bigger picture we're seeing here? Well, the bigger picture is, could we be going to test some of these highs back in the 2001-2002 period? So that's the question, because eventually the dollar index has to call off. There's no argument about that. At some point, it will come off for a calling off, just like we had here and just like we had here. In both of these situations, Bitcoin and crypto really benefited from a huge bull run to the upside. So we know that the next time we lose our weekly EMA ribbon and have a major downtrend here on the dollar index, that can have a huge run for Bitcoin. And again, this happens when the Fed pivots. It happens when the Fed goes from tightening to loosening. This down arrow here is the Fed loosening. This down arrow here is the Fed printing money and loosening, okay? Loose monetary policy. So the question now we need to ask ourselves is does this want to go back up to some of these highs all the way up to the 120 levels to test the highs from this period here, or are we done and are we ready to cool off? That's what we need to monitor here over the short period of time. Now, as we can see, whilst the dollar index cools off, we are seeing some strength here intraday on Bitcoin, and I'm going to share with you my next potential trade, and you're going to like this one, guys. And again, if you want to take any of these trades, BYBIT, BitGet, links in description, the two platforms I use. Again, only trade with what you're willing to lose or use some lunch money if you're inexperienced. Now, what pattern are we monitoring here? First of all, we know we've been in this channel between these two green lines. That's critical. We know that. We know we've had important support from 18,700 at the bottom of the channel. That's been proven, as you can see by this big cluster here, important support. But what we can see here, and what we've been monitoring, is a modified head and shoulders pattern where you've got two left shoulders, you've got a big head, you've got one right shoulder here, and now it looks like we're forming our next right shoulder. So this is the pattern we've got to work with. And again, I know this is not a textbook head and shoulders pattern, but we spoke about this in our course member live streams, which, if by the way you guys want to join, 3 times weekly live streams, ijaz.uk/member, we spoke about the fact that patterns do not get caught up with just the patterns. Understand the story of the bulls versus the bears. And this is the same thing. The bulls are trying to push the price up, get sent back down. They try to push back up, send back down. They push to the head, get sent back down. Push up, get rejected from this level, come back down. So now we need to see, will the bulls step up and go test this right shoulder? If we can get above this right shoulder, which, by the way, sits at 22,800, we have nullified this head and shoulders pattern, which not only saves us from some immediate downside danger, but could signify a larger move, a larger relief rally to the upside. Now, we know that October tends to be a positive time for markets. We can see that the markets here in traditional finance are opening up in the green, right? Yesterday was a really strong day. Dow Jones up 2.6% today, guys, 2.8% on the S&P, and a huge 3.25% here on the NASDAQ. So markets really are getting excited and deciding to run. Do I think this is going to last long term? No. I still think we have a whole bunch of things to figure out, and it's clear that we're not through this yet. You can see the Credit Suisse issue continues to be an issue. We can see that the Russia-Ukraine thing continues to be an issue. We can see the UK struggling. I mean, the UK are heading towards a mortgage crisis now, which is worrying. Again, reminding me of the 2008 credit crunch and housing bubble. This is not great. So I don't want you guys to suddenly think that we're out of the woods here. All I'm saying is we can potentially nullify this head and shoulders pattern, okay? Now, if we can do so, there are two things we can do. The first is you can take a short trade. If you guys are a bit more short-term minded, you can see we're breaking some important support here, okay? Horizontal, where my cursor is right now, is important support. Once we clear through this, you can take a trade up to the right shoulder, okay? That's one small trade because we want to see, does this hold as resistance? Could you be expecting resistance to push you back down to the downside? If we then clear this right shoulder, there's a second trade, and you can keep your first one open if you're in profits. There's a second trade which says we've then nullified our head and shoulders pattern, and I'm expecting a nicer, bigger move to the upside. Those are the two things I'm monitoring here on the short-term basis here on Bitcoin. But overall, nice, strong start here to October, which is traditionally a really strong month for Bitcoin and a really strong month for traditional markets as well. Remember, September was a horrible month for traditional markets. You had the Dow Jones down 9%, you had the S&P down 9.3%. That was the worst month since March 2020 with the pandemic. NASDAQ was down 10%. So there's a lot of oversold stocks in the NASDAQ, and same for crypto. So you don't be surprised to see some buying the dip. Now, does that mean I'm chasing green candles? For my long-term portfolio, absolutely not. I'm not chasing green candles. I'm going to wait for the market to come back to me. I want to see what happens here, and more importantly, what happens with the dollar index on the daily chart. This is the key one for me. I do want to see on this daily chart here, can we lose our EMA ribbon? Because on the 4 hourly, we've lost our EMA ribbon, but we've done so a few times here, as you can see, right? We've gone under our 4-hourly EMA ribbon, but then just won it back again. But what I want to see is, more importantly, the daily EMA ribbon. We've not significantly weakened below our daily EMA ribbon since going back to January, okay? And in January, we quickly, within 3 days, got back above our EMA ribbon. We've not had a meaningful daily EMA ribbon break since really April 2021, okay? Where you had a period here from April all the way to June where you're below your EMA ribbon. That is what's going to signify a nice move, a nice sustainable move on Bitcoin. In the short term, I'm looking for that head and shoulders pattern. Can we see that head and shoulders pattern break down? Remember, for the head and shoulders pattern to break down, we've got to get above that right shoulder. That's the key level for me, is 22,800. Now, that doesn't mean you can't take the trade between where we are now to 22,800, but keep in mind, that's a tough trade to take. You've got to be happy with your risk management, make sure you got a tight stop loss, and you can benefit from trading this up towards the right shoulder, given the volatility in the markets right now. Worth a shout out is you are seeing altcoins really start to move today. Ethereum up 2.5%, Solana bouncing back 4% despite their significant outages. Very interesting. Phantom up 2.3%. Some of the old guard moving as well, 4.7% there on Matic. We're seeing Chainlink up 6.4%. So do not sleep on these guys. This is why throughout the bear market, I was dollar cost averaging on a Matic, Chainlink, DOT, because at any given moment, they can come back in the narrative and start moving. So it's difficult to just see, oh, look, that coin's moving green, I'm going to buy some. Instead, you really have to have conviction such that on red days when things are really down, you have the conviction to buy. Coty is down today 3.5% after a huge day yesterday, up over 20%. Go watch my video from earlier where I explain exactly what went on with Coty. But otherwise, a nice positive market. But do not get carried away. Loads of things remain on the wall of worry. Things are not great. Longer term, macro-wise, things are not great. But if we can get signs of a pivot, the markets are going to get super excited. And that is why you're seeing green today. This is a bunch of speculators thinking that the Fed could pivot. But can they really pivot when inflation still is super high, when it's nowhere near the 2% price target that they've set? Fed are in a tricky position. And what they now decide to do from November the 2nd onwards is going to be critical to decide the fate for the rest of this year for the traditional finance markets and crypto. Hope you guys are trading and investing safely. If you want to check out the rest of the community aspects, check out the Discord, check out the Telegram, BYBIT and BitGet, links in the description. Thanks for watching. Go watch this video here, and I'll see you in the next one.